Ciao, University of Milan.
Ciao Milano, it's been a pleasure.
So I'm very happy about the event that we managed to organize for today, because it really brings together researchers that come from different universities, different countries, but also different research fields. We have scholars from finance, scholars from entrepreneurship, and what we assisted at today is really a melting pot of ideas and different theoretical framework and methodologies which were used by the different presenters and also discussed.
To understand how impact investors differ from traditional investors, we looked at all of the impact investors in the United States and compared their investments to those by traditional venture capitalists, looking at about 210,000 investments in total. Impact investors were about 3% of those investments. And we saw some substantial important differences between what impact investors do and what traditional investors do. Perhaps most interestingly, impact investors help pioneer new industries. They're much more likely to be the first investor in a new industry compared to a traditional investor. They also invest in specific geographies and regions, much more likely to invest in developing countries, but also within the US. Depending on their strategy, they will focus on poorer regions or poorer areas, and then finally, we saw that they tend to focus on innovative firms that are innovating in specific ways that are beneficial for the public. So we saw that they invest more in firms that receive innovation awards from the US government, or firms that develop patents that are in the government interest.
There's still a missing private capital in the ecosystem. For that, MEIEC is focused on attracting capital from private investors, crowding it capital, catalyzing our intervention is a key area of focus, and it's something we believe will make the difference in the evolution of the market.
There's absolutely a business case for impact investing, and there's a lot of evidence and growing evidence that funds and firms can do well by doing good. That doesn't mean that every impact investment is going to succeed, or that even on average, impact investments will outperform traditional investments, but we've seen many examples, even over very long periods, of impact investors earning very attractive financial returns.
The European Investment Fund is focusing in developing the impact investing ecosystem across Europe, and for that we are focusing on supporting fund managers, create a good base of fund managers that create value to social and impact-driven enterprises, give access to capital to those entrepreneurs, and expand the best market practices, leveraging on the knowledge we have from the mainstream venture capital activity, translating that value to the impact investing ecosystem.
I guess I would point to two really exciting things in impact investing. One is, I think the quality and the effort being paid towards measuring impact is growing a lot, and people are realizing that it's not just something you do during due diligence, but it's something that you can manage and help promote even as you exit. And then the second trend that's really exciting to me is how important our students are finding meaning in their work. So they want to graduate and earn a good salary and be able to pay back their loans, but they also want to do something that they're really proud about and they feel is meaningful. And so many of them are turning to impact investing as a way to achieve both of those goals.
I'm very grateful for all the speakers that decided to come, especially because we are proud to say that we don't only have many international scholars, but also Italian scholars for all the universities of Milan, which is a pretty rare event.